Palantir update here on the 7th. So earnings were really good. Stock sold off. It's been happening a lot to a lot of different stocks lately. And looking at the chart now, I think that there's a few different possibilities, but I still think the diagonal is intact. But what we're going to watch is we're watching this 200-day moving average right here. You can see here it has not even been tested in about a year. So that's going to be kind of the line in the sand for the stock. If we finish below the 200-day, then it probably topped out, to be honest. Then you're probably going to fill the gaps here and maybe go lower than that. So I'm watching the 200-day moving average to see what happens. But the pattern that I'm looking at still is still that diagonal. The reason I say that is I see ABC here. I see a smaller ABC here. But I also see ABC here too. And you can see what happened afterwards. On this one, it sold off hard. It retraced to about the 0.78 fib. On this one, even though it was smaller, it retraced to the 0.78 fib. And actually, this one has retraced to the 0.78 fib as well. So I know it seems kind of unlikely, but this potentially puts us right here or right here and getting ready to see a move higher. We're in daily demand as well. So I would be watching, I'm still watching this right here. Watching the 200-day moving average. And then I'm watching this demand zone between 2070 and 2177. And looking for that potential big move higher. You can see here it hit the 1.61 fib on this. On this one, it was just a huge move higher. Looks to me like a really extended B wave. I don't see this as an impulse move. This looks like ABC and a big extension for the C wave. And then this is ABC right here. So there's no telling if this does extend. There's no telling how high it can go, but 29 would be the 1.61 fib. But again, you have this gap fill here at 31.42 to 33.24. So you could still be looking at, you know, something like this, to the top of this range, and that being the top. I was looking at different possibilities, like we topped out right here. This is the top. So fourth wave, fifth wave is right here, and we're making a B wave here. However, and it's still possible, but this would have to be WXY because otherwise I would want to see this as an impulse move, but it's not impulsive, it's a corrective move. So if that were to happen, you'd be looking at it like this. And you'd be looking at this as we'd probably be heading down here to 1870 or so. Hopefully holding the 200-day moving average. But that would also have been the top right here. This would just be a corrective move down and potentially a bounce and then another move lower after that. So this is a bearish move right here. This would basically mean this is probably a wave one. Something like that. Down here to 200-day could break it, could come down here all the way to the gap fill at 1693. The gap fill is actually at 1788. So it could come all the way down here too. The bearish is down here to 16, 17 bucks. You'll know if it breaks the 200-day, if it breaks this demand zone that ends at 2065. But again, the diagonal is still intact if it follows the pattern is followed this whole way. So be looking at this still. It's just going to come down to the overall market, I think. I still think this is the biggest spot that they want to sell into. And so I do think that there's a very good chance that I'm leaning towards the upside still. But you have to be prepared for this gap fill down here. That's a pretty obvious move. And I can't tell you which one's going to happen. I do think the overall market's going to go higher. And we're in demand. So we'll see what happens tomorrow. I would want to see maybe a candle here in the next couple of days. A small candle right here. Maybe. So we can look at this candle right here. Maybe a candle similar to this, and then a pullback, and then a rip. So we did it right there. On this one, small pullback, rip. Small pullback, rip. So down here, maybe it does this. And then you get rip, like that. So we'll see what happens. It's kind of hard to say, but right now, just on shorter time frames, you are in a big demand zone. You sold off a ton. You can look at the standard deviation, see where we're at. Standard deviation channel. Let's just take a look at where we're at. On the 1 hour, we're at the very bottom of it. On the daily, we're kind of at the bottom too. We're at -1 standard deviation. So this is set up, like I showed in the last video. It's still set up for that move higher to 33 bucks. So again, it's probably unlikely you're going to come down here to 1783. It could happen, like I showed you. That'd be WXY. But the upside still looks the most likely. As long as you hold the 200-day moving average. You are below the 20 and the 50 though. So it needs to regain the 20 and the 50 and head up higher. Not sure which one's going to happen, but I'm leaning towards the upside. And you can see here, I showed you this box in the last video. It was going into that box before earnings. And what happened? That was a supply zone. You're selling into these supply zones. You're buying in these demand zones. So this is a buy all day right here. If you're trading, then you would probably put a stop below the low here, maybe below 20.35. But if you are a long-term holder, you can buy here and just average into it. It should bounce out of here. I don't think we're going to come right through this and then just make new lows. Should be bouncing here soon. And you have a gap now right here at 24.72. Right back in that supply zone. So I know there's a lot of what ifs in this video, but there's no way of knowing which pattern is going to play out. But I do see a bearish path and a bullish path from here. And I still see that diagonal as very, very possible. Like this. But I also see possible to come down here and fill the gap at 18 bucks. So let me know what you think in the comments. Like, subscribe if you're not already. And we'll keep you updated the rest of the week. We'll see what happens. I'm in this stock too. I bought some. I actually sold puts prior to earnings on $23 puts. I'm down on those. Not really worried at all. And then I also bought some shares at $21.50 today. So we'll see what happens. But you have that support on the 200-day moving average. And down here, I guess, at 19 bucks. So it's not all bad. Just a horrible day, probably to kill a bunch of options. All right, that's it for me. I will talk to you guys soon.